Hey everyone, welcome back. Today we'll be having a look at Rivian versus Tesla. Which is the better stock? Long term, which of these stocks will benefit you most when it comes to holding? Now, just a reminder to everyone, this video is not financial advice. This video is specifically for educational purposes. Now, Rivian and Polestar are both backed by major automakers. Let's keep that in mind. Both EV maker will deliver tens of thousands of vehicles this year. Now, one of these stock is too pricey relative to its growth, and we will discuss that. The pricey stock is obviously Rivian. A lot of people, including myself, we do believe that the Rivian share is completely overvalued. And on the other hand, the Polestar share is completely undervalued. So we're in an interesting situation. So these two promising EV stocks stands out in the market, but while there are some of the well-known companies in the EV stock market, the EV stock market is also filled with failures. So we have to keep that in mind. Keep in mind that SPAC acquisitions, they've become extremely popular in the last couple of years. And many electric makers, they went public over the last couple of years. However, several are also disappointed in their early investors with ongoing delays, cancellation, and reduced production targets. A lot of these EV companies, they actually came around with a lot of interesting ideas, a lot of great momentum, but after they tried to start production, they realized that making electric vehicles is basically mission impossible, especially when you're low on resources and money. Now, EV makers that went public by merging with SPACs, special acquisition companies, also frequently represented bullish long-term forecasts before shipping a single vehicle. I mean, of course, we all know that Rivian IPO'd at above $80 to $90 billion. How crazy, that's the same value as Porsche IPO'd. Now, when investors realized that they couldn't fulfill those promises, their shares collapsed. Like Rivian, it's collapsed. But despite the fact that Rivian has collapsed and lost like 60 to 70% in terms of market cap value, Rivian is still overvalued. They're like 28 to 29 billion in market cap. And for a company who hasn't completed 25,000 vehicles delivered, that's too much. And I think a lot of people will happily agree with that statement. Now, in all of this, rising interest rates exacerbated that sell-off by crushing speculative, unprofitable, and overvalued stocks. And a lot of stocks got hit hard this year, a lot of them, including Polestar and Rivian to a certain extent. Despite the fact that Rivian still holds a $28 billion market cap, I can guarantee you the investors would much rather the share still be at $80 to $70 billion in market cap. They didn't want it to fall this low. But what a lot of investors have to consider is that they're in too deep. They've lost too much money, so it'd be completely lost if they sold out right now. The only way that investors sell out right now is if they want a tax break. They would sell their shares and claim that they've lost capital during their investing, which means that they'll end up paying a lot less tax when that tax season comes around, because they've lost capital in terms of their investment and incomes. It's a very strategic world that we live in, especially with investors. Whenever they sell out, they're selling for specific reasons. Some investors haven't sold out in Rivian because they understand that they're in too deep. They also understand that Rivian can be a profitable company if they're willing to wait 10 years, if they're willing to wait 5 to 10 years. So granted that there are investors out there that are thinking exactly like that and they're willing to wait. Now, as a result, the red-hot EV sector turned ice cold this year. Come on, we all know this. However, a handful of promising EV companies, which had actually started to mass-produce thousands of vehicles, these individual companies, like Polestar, like Rivian, they're starting to ramp up production. Polestar is going for 50,000 vehicles delivered this year. Rivian is going for somewhere between 10 to 20,000 vehicles delivered, which was roughly the same amount Polestar delivered last year. While that's not exactly what we wanted from Rivian in their first year, it is better. It is way better than what Canoo is doing, what Arrival is doing, what plenty of other EV makers are doing. At least Rivian is showing that they have the potential to produce up to 100,000, 200,000, 500,000, 1 million, and so on. They're showing that they have the potential. So while they are overvalued, keep in mind that they're only overvalued because they're not delivering 100,000 or 200,000 vehicles. Consider this for a moment. If Rivian was delivering 250,000 vehicles, 250,000 vehicles right now, would you be saying that Rivian is overvalued? Absolutely not. I would not say Rivian is overvalued if they were delivering 200,000 vehicles or 250,000 vehicles. I would not be saying that. I would actually be investing at this price. So Rivian is only undervalued because they can only deliver 10,000 vehicles, 20,000 vehicles. But one day, quite soon, in the next 5 years, maybe less, they will be delivering up to 250,000 vehicles. They will be delivering over 250,000 vehicles in the next 5 years. So how will the stocks perform for the next 5 years is extremely crucial as an investor. Because if the stock price is still the same in 5 years, yet Rivian is producing 250,000 vehicles, well, then there's a lot of questions that need to be answered right there. But I can guarantee you, I'm not sleeping on Rivian. It's a great company. It's a great company to invest in. It's just that it's a little bit too expensive right now. I need it to be a little bit more cheap. And I know it can be a bit more cheap because it wasn't too long ago, back in May, Rivian was just around 22 billion in market cap or 21 billion in market cap. That's the perfect place to buy. Ideally, I'd like to buy even half of that price, but ideally, that's our marker right there. But once again, not financial advice, just my opinion. Now, Rivian, of course, they went public through a traditional IPO last November, and Polestar, they went public by merging with a SPAC this June. Now, originally, I think Polestar was scheduled to go public last year because the market was performing so well. However, that got delayed for a lot of strategical reasons and business-related reasons, and I can understand that. But what Polestar did not predict was the complete downfall of the EV market this year. Come on, you can admit that. The market has been very unkind to EV companies this year, especially SPAC mergers. So what you might be wondering is, why should I care about Polestar or Rivian? So both of them do stand out. There's lots of other EV companies to talk about, but today we're focusing on only Rivian and Polestar. Now, Rivian, which produce electric pickups, delivery vans, SUVs, is backed by Ford. And it's also backed by Amazon. Amazon is a huge investor in Rivian, and they're a huge partner with Rivian as well. Amazon ordered over 100,000 electric delivery vans to be fulfilled by 2030. And thankfully, Rivian has recently started delivering these delivery vans to Amazon. So this is fantastic. Now, Polestar top investor is Geely and Volvo. In fact, originally Polestar was a racing division and performance division within the Volvo company, kind of like Mercedes' version to AMG. But in 2016, Polestar became its own company with investor parent company of Volvo, Geely. So Polestar is backed by two major companies. And that's why Polestar has been able to deliver such great numbers. And that's why Polestar has been so successful so far. And not to mention, Polestar has a new SUV on the way. Their first SUV, the Polestar 3, will be debuting this month on the 12th, Wednesday. And I will be live on my YouTube channel reacting to the entire event. So I hope you watch just to watch me react to the entire event. That's going to be fun. Now, Rivian has manufactured approximately 8,000 vehicles since its production since last September, and it's planned to produce 25,000 vehicles this year, but that number has been reduced. Of course, we've only got 3 more months left. I don't think that they can hit the 25,000 vehicles this year. But despite that, they've done pretty well to ramp up so quickly. But of course, they have no excuse in this because they've got the factory and they have the money to invest. But at the moment, because Rivian is so inefficient at producing vehicles, I guarantee you they're running through cash. The only good thing about Rivian right now is that they have a lot of excess cash, a lot of money that they made in their IPO investment. Now allow me to update my previous said statement. Polestar actually shipped 29,000 vehicles last year. 29,000 vehicles last year. That was their first year in production. This year, they're going for 50,000 vehicles. Originally, they were going for 69,000 vehicles. That's been reduced. Next year, they're going for, I believe, 129,000 vehicles, but I think they're going to have to reduce that number to around 90 to 100,000. Now, Polestar so far has delivered over 21,000 vehicles in the first half of 2022, and it expects to deliver, of course, to 50,000 vehicles by the end of this year. And I think that they can definitely achieve that number. Now let's look at some revenues by both companies. Rivian generated 55,000 in revenue last year, but analysts expect to generate 1.8 billion in revenue this year. They expect that figure to soar to 12.19 billion by 2024. So basically in 2 years' time, by 2024, Rivian will be making over 12 billion in revenue. That's pretty impressive. Now, this represents a compound annual growth of 159% as it ramps up production and gradually fills Amazon order of electric vans. Now, we can expect that Rivian will be losing billions of dollars each year because they're so inefficient at manufacturing vehicles. They still have so much to learn and so much to learn of how to improve and to reduce the cost of manufacturing vehicles, kind of like Tesla. That's why Tesla vehicles are so minimal in areas that you can afford to save and still sell a large amount of vehicles. Now, Polestar generated $1.3 billion in 2021 from their 29,000 vehicle sale. Analysts expect the revenue to rise 77% to $2.39 billion in this year. Not to mention, Polestar is looking to grow to at least $11.8 billion in 2024. That's what some analysts are saying. Now, keep in mind that Polestar is bringing two new vehicles to the market. That's the Polestar 3 this year, an SUV, a big SUV. Next year will be a mid-size SUV coupe. That'll be the Polestar 4. So they intend on bringing new vehicles to the market to introduce to their customers, to sell to their customers. And they are in so many different areas. I believe Polestar is in 25 different markets. So that's really extraordinary. And they just keep on ramping up. They just keep on excelling. The point of this video is to demonstrate the essential point that despite the fact that Polestar produced more vehicles than Rivian, they're undervalued. At $10 billion in market cap, Rivian produced less vehicle and they're overvalued at $28 billion in market cap. But both companies have great long-term trajectory. Both companies will be extremely valuable long-term. They hold great potential for long-term growth. Both companies, despite the criticism, despite the fact that one's too overvalued and one is undervalued. Their long-term trajectory is massive. So that's it for this video. Thank you for watching, and of course, I'll see you in our next video.